Hi, I'm the College Money Mom. Have you been thinking about consolidating your student loans? Lots of people have been doing that for lots of different reasons. One reason is because you've just graduated from college and are faced with repaying your loans either immediately or after a grace period. When you sit down to take inventory of your loans, you may see that they are all different. They could be federal loans or private loans. They could be from undergraduate or graduate school. And since many of the loans began in different years, each one could have a different interest rate and different terms. This may look like a nightmare for which you'll need a really big spreadsheet. It's a lot to think about while you are just getting started in the world of work. Consolidating your loans can make your life a lot simpler and minimize mistakes. If you have private loans, you can shop around among lenders to get a better interest rate or even a fixed rate by consolidating. Good credit scores get the best rates, but there can be fees. For your federal loans, the process is free and pretty much a one-stop shopping trip. Just go to studentloans.gov where there is a ton of information. Here you can find out which federal loans are eligible for consolidation and how the interest rates on your federal loans will be averaged and weighted so that after consolidation, you'll end up with about the same overall rate. Best of all, you can learn that by consolidating your federal loans into a direct federal consolidation loan, you may have the opportunity to choose one of the income-driven repayment plans, like the current pay plan or the new repay plan, all of which offer lower payments. Depending on the plan, any remaining debt could be forgiven in 20 or 25 years. If you do choose one of these repayment plans, you may also be eligible to get forgiveness in as little as 10 years by working in a public service job. Now, if you have been out of college for a number of years, you may have wished you could switch your loans to one of these new federal repayment plans. Up to now, however, most older borrowers were left out of these more affordable plans. As of December 2015, the newest repayment plan, called Repay, will include all federal student loan borrowers no matter when they got their loans, and provided that those loans have become federal direct loans through consolidation. Unlike the other income-driven repayment plans, Repay will not have an income requirement. But just like the other plans, your new lower monthly payments will be only a small fraction of your so-called discretionary income. However, under Repay, this discretionary income will be calculated using the income of both spouses rather than just that of the borrower alone. Also new under Repay are two categories of remaining loan balance forgiveness: 20 years for undergrad loans and 25 years for graduate school loans. So, whether you are a recent graduate or an older borrower, you will have the opportunity to get affordable student loan payments by consolidating your federal student loans into a federal direct consolidation loan. If you have questions, please email me at thecollegemoneymom@gmail.com. Be sure to like me on Facebook and subscribe to me right here on YouTube. Thanks for watching. Bye-bye.